Good morning. My name is Scott Redler, Chief Strategic Officer, T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing green arrows around the world this morning, with China being the standout after the new policy reforms were announced and the easing of its one-child policy. So before we get to our markets, let's check in on markets overseas.
It just seems like a lot of the same. Every day we come in here, one market's taking the lead, and this time it happens to be China. You know, based on the reform, that's a big policy. They've had that policy for a while. That's going to change the dynamics there for some times to come. So with that being said, I can't forecast what it means for their economy. I can just show you the chart of the FXI, which we've been talking about, every few weeks. And if you look here, this was that double bottom over the summer. This is when you had higher lows. It broke above this downtrend, extended, came in. Look at this, a retest right here, held the gap, and now look, blast off. So that being said, it's probably going to be up this morning. Here's your pivot, 39. If it takes out 39 and closes above it, look at the old highs here, close to 42. We've been talking about getting some kind of exposure here for a lot of different times during the year. At this point, I do think if it's not by the end of 2013 and sometime in 2014, we're going to take out this 42, and you're going to see more continued upside there. And as far as just real quickly, we'll check on the Nikkei. We've talked about this so many different times this year. You had this huge move with that outside day in May. Came down, gave back. Remember when everyone said it was game over, down 20% for the Nikkei, but we were up over 50. Anyway, you had your reversal here. From here, we've been just trying to trend higher. Recently, this has been your latest trend, and now we're above it. So I don't want to hear any complaints if you have no Japanese exposure, because we've talked about many different times, depending on your time frame, get a little involved. There are ways to buy ETFs if you want exposure to Japan or China.
Yes, no complaints there. No complaining tweets.
Yeah, please.
But getting to our markets, our futures up a tiny bit this morning after our markets made new highs last week, continuing the most recent leg of the rally that started with the jobs number the Friday before.
There's been so many different legs of this move. It all depends on how you want to trade it. As far as the macro trend, like we've discussed, it's been intact since 2 years ago, and when we had that outside day. But, you look at the trend since November, it's been just to the upside. All right, here's your red dog reversal back here in November, almost a year ago. A few different times it came close. This time it almost broke it, but reclaimed it quick. You take a closer look here at the SPX, and you will see here is that red dog reversal. Here is when we engulfed that descending channel to make new highs. And then look, guys, this did look like it could be time for a correction, okay? But it got engulfed, like Brittany said, on that jobs report. And then even if you didn't want to get long on this day, you just wanted to cover some shorts because this shouldn't have happened if we were that weak, here is where we digested higher. Then last Wednesday, you had a red dog reversal right around 1762. We powered through 1775, 3 up days, and now we're flirting with 1800. So with that being said, you do have time for adjustments if you're trying to trade for P&L and for alpha.
And then meanwhile, now we're seeing bubble talk sort of get louder and louder. Do you think the market is getting ahead of itself?
People have been saying that all year, that we're going to, I like the market, but we're going to correct 2 to 4%, maybe 15%. And that's been the, the theme. What you have to do is you just have to figure out, what's your time frame. And sometimes you have multiple time frames. You could have a 401k. I know we're high and people are like, oh, I'm going to cash out my 401k. Okay, if we pull in and then 5 years later and you're 35, you don't get back in, how'd you do? No. You stay the course in your long-term accounts on an intermediate level, or as a trader like myself. You know what? Can we see 1820 to 1840 by the end of the year? Maybe. Okay, but how we see it and how you could trade it, it's going to be a little bit tricky. So that's why you want to look at the setups, the setups, the setups. Stay involved. We've talked about 1 foot in the door, 1 foot out the door. And that Thursday before the jobs number, people almost closed the door. But it stayed open like it did for the majority of this trend of 2013. So until that changes, do not have short on the brain. So
let's dive in then and check the temperature of the different sectors. We saw the IYT and XLP, we're talking transports and consumer staples, show a lot of relative strength last week. And we actually saw the IYT set a record high on Friday.
Which just gives some confirmation to the strength. So you don't have to pick every sector. You pick a sector you know and you trade it. You look at both of these ETFs. Looks just like the S&P, where it held where it had to, came back up the highs, powered through. So the transports are acting very well. You look at the XLP, lots of big name stocks in there. Came above it earlier, retested, hovered, and then went to highs. So you're seeing consumer staples and the transports, nice strength and confirmation there.
And banks got back involved. We had the XLF join the rally with a nice 3-day rally and actually made a new high at 21.15.
Yep, and this group that's been kind of lethargic and everyone's been pointing at saying, oh, the market can go higher, the banks didn't make new highs while other sectors did, finally woke up on that Friday. So you look here, what could you have seen to get back involved in the banks? Because I wasn't in the banks either. I was out of the way. I was like, okay, I'm waiting for a signal. Here is your signal. This engulfing bar was your signal to re-enter some of the banks. Then it came in, got a little wishy-washy right here, but then you had a nice reversal. Now you're at highs. Lots of opportunities continue there. They've been there all year.
And biotech also had a nice move back to highs. What are the level swatch here?
This group has been, there's been some stocks beaten up within. I have a hard time trading the bios because I always feel like some kind of headline is going to just wipe me out.
Yeah, so data driven.
Yeah, and you could get rewarded, and be involved in something up 20, 30%. But to me, I'm a blue collar trader. I like to grind it out. So, for the bios, I'll list them, whether it's Celgene, Amgen, or some of the little ones. You could play them. But for me, I tend to only take the intraday setup when it's really clear cut. You look at the IBB though, not at new highs yet, but close. Okay, right back up there. Here is where it broke above this intermediate trend. You're right back at highs. I don't know if it's just going to blast right through. Maybe it tries to hover, go sideways beforehand, but ultimately lots of opportunities in bios also.
All right, coming up, we're going to go in the trenches with some bank stocks coming up right after this quick commercial break.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We saw the banks get back involved with a rally, which is a positive sign. We're going to dive in the trenches with some of these names, starting with Goldman Sachs. Let's take a look at this chart.
Yeah, this one used to be the one that led, that had really strong, days where you start on the lows, you close on the highs, and traders loved them. And now the stock's been a little lethargic. It's been a little beat up, and it's been a little, I wouldn't even say beat up, just it's very hit or miss and random. It starts off strong and then gets weaker. This range since October has been very, very hard to trade. So maybe it finally lets loose and starts to be a better as far as to the upside. I haven't had much success here, I'll tell you that much. But anyway, if it were to get above 165.42, you do have the older highs here all the way up at 170-ish. So keep it on your radar. Just don't get too big because it changes its complexion intraday and doesn't make it the easiest to handle.
How about JP Morgan? Had a nice 3-day move. How do you approach it now?
Well, this one, it's obviously been the whipping boy for the government, like their piggy bank, and it's taken it in stride. It hasn't made new highs. It's been a little bit on the outside, but last week it woke up, so it's good for traders when that happens. This one's been a little cleaner. You look at the chart, you'll see that at least you have definable levels. This little downtrend got broken with authority, okay, way back here. This was, I believe, November 8th, and then you had an upper level digestion, which made it somewhat easier to hold. Wasn't as choppy as some of the other stocks, and now it continued. So here you are. I believe the settlement is almost done, and the numbers aren't as big as what people thought. So who knows? Once that's out of the way, this could be making new highs above 57. Hasn't done anything for a while.
And Bank of America broke above the downward trend line on Thursday, then had great follow through on Friday. Will you be looking to it today?
Yes, but at this point, people can get all excited because maybe it'll be trading above 15. The time to get excited was last week. Okay, that Friday, it engulfed, that range that it's been in, and then Monday, I finally went back into it around 14:30. You look here at Bank of America. I've been talking about the stock most of this year. Here is this upper level range that it was consolidating for 4 months. So with that being said, to see what you could have seen if you don't have it in the drawer, like I talk about. Here is this engulfing bar. This is a nice potent, this is what I call day one. People are like, what's a day one, Red Dog? Well, here it was. This was your day one. Took out this descending channel. Then what did it do? It held higher. I did not get involved on day one. I got involved in here as it digested, and then there was your breakout. So now here's your old high. It might even be opening up there this morning. You look at it, it's had a, my style. 3 up days, it's hard to add. I'll probably trim some, but ultimately, you go to the monthly chart on this for next year. What does Bank of America look like for next year? For next year, it doesn't seem like there's any reason why you can't at least try and test this 19 area. And if it does get going, why not see somewhere closer to 24? So at this point, stay with the trade, and there are times when you could add and take off.
All right, Morgan Stanley, we saw it put in a new high at 30.52 on Friday before seeing some profit taking. For today, what would you say is the key level it needs to hold?
It's a little extended from the 821. This is acting much better. From the first half of the year, Morgan always was like, why isn't Morgan making new highs while the rest of the banks are? Well, this one has been leading the way. So you look here, if you're in it, this was your last ad, and now it's just crawling higher. I think you stay with it. I don't see like a clear-cut position to just buy. And did a little red dog reversal, I think, on Friday where I tried to trade below, but I'm not going to put too much emphasis on that. Ultimately, if you're saying what level does it need to hold to stay interesting, I'd like to see it continue to ride the 8-day, which stands at 29.85.
And Citigroup looks like it has a pretty tight pattern here. Are you expecting a breakout?
This is one that I just went back to late last week saying, okay, you know what, if the banks are going to go, people are going to say what's next, and Citigroup has just been kind of out of play. So you look here at Citigroup, and it doesn't look so bad. You had this sideways consolidation. It looked like it was going to go on Friday, but maybe option expirations held it down. At this point, I am long it, and I will stay with it as long as it stays above, just say, 50. The longer it stays above 50, the higher the probability that it works its way back to, you have a pivot here, and then you have the old highs. So with that being said, there is room if people want to play catch up with some of the banks, and Citigroup at times gets a little bit streaky, and this one can do that.
All right, time for some quick hits here. How will you be approaching Netflix this week after the nice 3-day rally it had last week starting on Wednesday?
Now it's a little tricky. It's gapping up today.
Right.
We talked about 344 on the price point sheet or off the charts last week. You look at the chart. It's trying to work off this crazy bar from earnings, and it did it. We talked about the small red dog reversal right here, and that never got taken out. And then the most recent move was on this reversal into this. So if I were you, I wouldn't be chasing it up here. If you did get long and you held it over the weekend, trim some and then see if it continues to extend, because if it starts getting through this 355, 360, this powerful wide range bar will lose its inflection.
All right, and Google hovering near highs and trading above all key moving averages. Does it look as though upside momentum remains intact?
I sure hope so. Barron's actually said this one, there's some value left or whatever, some potential. You look at the chart. This to me has been one of the strongest charts. This had its earnings. It wound up continuing, gave you an extra trade, and it's been consolidating now for a while. Never filled the gap, held higher. It's getting nice and tight in here. I am long some. I'd love to be able to buy more through 1,039, 1,041. I was here with Greg Harmon, and he said the measured move of this thing could be north of 1,100. I'm not even going to tell you where he said it can go, but overall, into next year, this could be a name that continues and extends, and strong stocks typically end stronger.
Barron's actually looped Apple into the same boat as Google, and Apple lagged the market on Friday. What do you think about Apple here?
Apple triggered through that 523, 524-ish area on Thursday. Got all excited, and then what did Apple do? It doesn't make it easy. So it was down a little bit on Friday. Could have been for option expiration. Who knows? You look at the chart right here, and it needs to hold now. I think a lot of traders, including myself, would get very frustrated if Apple comes back and closes below, I would say, just this mark right here, which would be, what's this low? This low is 521.87. So as long as it stays above it and shows some commitment, I think that there is potential for it to take out that Friday high of 529.28 and then eventually get here. So I am long some, and I'd love to see it hold here and continue and give us some kind of momentum, because Apple hasn't had it for a while, but I guess we could be a little spoiled because it has had a 120-point move since 2 quarters ago.
And LinkedIn, what are the key levels to watch in LinkedIn after a nice 3-day rally, and it's now back above 121 day?
This was looped into the bubble type stocks with the high valuations. But again, from where it was at 90 to 250, if you thought the PE was too high to invest in it, you missed out on a big winner. So I look at the technicals, and technically, this did look like it was breaking down a little bit after earnings. You look at the chart here, you will see that here is where it broke below on earnings, and then you had this small bear flag and continuation, and then what did it do? It held support. It triggered above here and gave you a spirited move. So now I would say it's going to need some time to digest. It might be opening down a little bit with that Barron's article, so I would say as long as it stays above this 220 to 224 and goes sideways, it could build a constructive pattern. It just needs time.
And like LinkedIn, Barron's called Facebook one of the current bubble stocks. It's hovering around the 21-day right now. What are the levels you're watching there?
Barron should not talk about Facebook. I remember when that was at 25 and me and Kramer did this whole big segment about how it can go back to 38, and then they said 15. People were like, red dog, red dog. Anyway, with that being said, it does have a high valuation, okay, but you know, the price pattern, it's got liquidity. People need exposure to some names. Recently, there's been a two-way trade here on Facebook. You could have made a lot of money from the earnings, and then it started to get wishy-washy after this last quarter. So now it's at one of those spots where it's got to prove itself. So if you look at the chart here, you will see it was a decent methodical short all the way down to this area where, remember when it took back this 47.30, some shorts got squeezed. So now it's got two inside days. Maybe it's down a little bit with that Barron's article. I would say if it could hold above 48 and go sideways, I know who cares if it's a bubble name or not. Some people will be buying it above 49.5. If it gives up this area, starts working its way back, then you'll start hearing the chorus on how, you know, this was a retest, needed more time, and here's a head and shoulders top. So you have two conflicting patterns. You have a descending trendline channel, and you also have a potential of a head and shoulders top. So to me, I'm just going to see which one resolves, and I'm going to try and jump on whichever way that is without any opinions.
All right, and over in retail, how about we check in on JCPenney? Doesn't this name have earnings this week?
It does. So I'm hoping that it gets to 950 or higher before, so I don't have to hold as much. We've been trading this thing since it started acting better, one of those treasures for trash trade, because if you've held it from the high teens or the 20s, it's in your trash bin. For us, technically, it became a treasure. So let's look here. You know, so this is really what just to show you what they're like, Red Dog, what'd you see in this thing? This is all I saw in it. I didn't go to their showroom and say, I'm going to start shopping at JCPenney's. I saw a nice wide range bar engulfing this downtrend. That was, put it on the radar. Then what did it do? It digested, flagged, and then you saw a nice continuation trade above this 770 to 850. And then all of a sudden you had another area where a lot of, you see the filings, some big guys came and bought this back. So it's saying, okay, maybe it's not a zero or a bankruptcy waiting to happen. So with that said, nice move already. But if you look in hindsight, people are like, oh, it's already had its move. Look where it came from. This stock was 2012. It was $40. So here at 9, it still has some room. If it really wanted to stay intact and the earnings were okay, you could see at some point in 2012 after the January effect, maybe even 12. So trim and trail it, use the patterns. It's been something we've been trading for 2 weeks. We've had some success.
All right, so what will you be focusing on today as we begin the trading session?
It's all about the setups now. I think the real money has obviously been made. You're up 25% in the S&P. So if now I think people are trying to preserve, but they're trying to just add on P&L because as a trader, you're almost only as good as your last month, and you have to make money in order to get paid, most traders. So with that said, you have to continue to look for the setups, whether long or short, and stay with it so you can get a check the next month. If you're a money manager, it's a different story. Some people are trying to say, okay, I did pretty well, I'm not going to put myself at risk. Some guys are like, oh my goodness, I'm up single digits, market's up this, I want a job next year, I got to play catch up. So it's all where you stand.
Right.
But for me, I'm just going to look for the setups. The trade stays the same. I've been trying to hold a portfolio approach. I readjusted that Friday and last week, and I'm going to try and manage the positions with the hedge and the spiders now as we're on day 4. And in my process, I love to buy day 1 feeler, add on day 2 confirmation, sell a little bit at the end of day 2. Maybe I usually get flat day 3 and cry if we go up day 4, day 5. So with that said, we're now day 4 on the upside and the spiders on top of that reversal. So, this could be a little bit tricky if you're just initiating new longs, but in individual names, there's still lots of setups.
All right, and with that said, that's your morning call for this Monday. Happy trading. Have a great day.